how do you work out if you are in Makingtaxdigital? What are the quirks? Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. The big question now for Makingtaxdigital is, are you in or are you out? And if you're out, are you coming in later? And when are you coming in? So we're going to have a look at a couple of examples today of different scenarios, different situations to see when someone is going to be going into Makingtaxdigital. So you can have a look at your numbers, see what you need to be doing and when you need to be doing things by. Because this is very much going to be based on what your gross income is, what your self-employed income is, and how it fits together. So we've got a couple of examples today, and hopefully these will give you an idea of how it fits together so you can start looking at when you are going to be impacted. Let's dive into some examples. Let's have a look at a few quirks of Makingtaxdigital and how it fits together with our gross rents so we can understand when we are going to be into the scheme. So first we're going to have a look at a few normal incomes which will probably be coming in April 26, and then we'll have a look at a few different quirks. So let's start with example 1, where we have got someone with property 1, which is a buy-to-let, who has £1,400 rent per month, which is giving us £16,800 per year. Now they've also got property 2, which is another buy-to-let, which is getting £1,200 per month, which gives us £14,400 per annum. Property 3 in their portfolio is going to be giving them £1,000 per month, which works out at £12,000 per annum. And the final one in their portfolio is property 4, which again is a buy-to-let, and this one's getting £950 per month, which gives us £11,400 per annum. So we now need to add up our total income that we're receiving from all our gross rents, which gives us £54,600 per annum. Now, as this is over our 50,000 limit, this means that the implementation date for this one is going to be April 2026. So everything from the 6th of April 2026 will be reported on the quarterly Makingtaxdigital reporting requirements with the quarterly digital filings and the final declaration at the end of the accounting tax year. Let's move on to another example which gives us a slightly different variation of what we're looking at. So let us move further up and go on to example 2. And in example 2 we have a property 1, which this time we're going to look at a HMO. And in our HMO we've got one that is getting £2,500 per month, which gives us a total income of £30,000. Property 2 for this one, and again this person has HMO, so another HMO, and this one is giving them £1,800 per month in gross rent. So that is giving us £21,600. So now when we total these up together, we are getting £51,600, which again in this example with just 2 properties here, but they are HMOs with higher rental income. These are now being implemented in April 2026. So it is not necessarily a matter of I've only got 1 or 2 properties, I am not going to be in the new Makingtaxdigital regime. It is very much based on your rents. If you're renting further south in London, you are more likely to be in sooner. If you're renting further up north and your rent's more down at the £450 per month, then you may have a few more properties before you kick into the Makingtaxdigital regime. So let's move on to example 3, and we will look at a slightly different set of numbers. Now in example 3 we are going to have property 1, which is a buy-to-let. but our buy-to-let this time is only at 775 per month. So this one is now in at 9,300. Now we've got another property, as you may guess, which is a buy-to-let, and this one we are getting 825 per month, so slightly more. So we've got 9,900 per annum. And then property 3, which is a buy-to-let as well, and this one we're getting 925, and that is their entire portfolio. So our third one is 11,100. So we've now got our 3 properties, and we can solve this to get us 30,300. So we're now under the 50,000, so we don't have to go into Makingtaxdigital from April 2026. However, anyone over 30,000 will be going in April 2027. So on that basis, our implementation for this is going to be April 2027. And at that point, you'll need to have registered for Makingtaxdigital, have digital files, record keeping for your property income, and then you'll have to be doing quarterly submissions and the final declaration. So on that basis, you need to be keeping abreast of what is happening so that you are doing what you need to be set up for April 2027. Now let's look at one more example, and this example is going to be looking at someone who has joint income. So this may be a husband and wife, brother and brother, sister, brother and sister, whatever combination, and everything in our example now is going to be owned jointly. So let's make a note that we are on example 4. And in example 4, we have property 1, which is a buy-to-let, and our income is 1,400 per month, which gives us total for this one of 16,800. We've got property 2, which again is a buy-to-let, which is getting 1,200 per month, which means we've got 14,400 in a year. We've got property 3 in our buy-to-let, which is 1,000 per month, which is 12,000 per year. We've got property 4, which is also a buy-to-let at 950 per month, which is giving us 11,400. And then we've got property 5, which is a buy-to-let, which is at 975 per month, which is giving us 11,700. So overall, we've got 66,300 per annum. So you might go, oh, but that's over 50,000. They will be in from April 2026. However, I said that this one is joint ownership. And when we're saying joint ownership in our example today, we are going 50-50. So we've got to divide that by 2, which gives us, for each person, 33,150 per annum, which actually means our implementation of Makingtaxdigital is going to kick in from the 6th of April 2027, because we are over the 30,000 limit as joint ownership rather than the 50,000, which if it was owned in one person's name, it would be definitely over 50,000. As everything is split by 50-50 all the way through, half the rent, half the expenses, this means we're actually only having 33,150 rent in a year, which means we're over 30,000, which is why we're at the 2027. Now, it's key to remember that each person will have to keep their own digital records. However, I will say there are some great softwares out there which will be able to cope with joint ownership. So you may want to look at a software like that if this is your example where you have jointly owned properties, so that you're not having to duplicate all the entries into a piece of software, so you can show just your 50%. There are definitely softwares out there that will handle recording the transaction once and splitting it into whoever owns what proportion of the property. Probably very important for anyone who has more than 2 people owning a property. 2 people is hard enough to split on a spreadsheet or on software. if you've got more than 2 owners and you're going to be having to report under Makingtaxdigital over the 20,000 at some point. If there's 3, 4, 5, 6 owners of a property, it's starting to get more complicated. So you probably want to just make sure your software is going to be able to handle this. As you can see, we are looking at gross income. We are not looking at any deductions such as managing agents. We're not looking at any other expenses such as repairs or mortgage. We are looking at top line figures here, and it's very crucial that we remember that. The key tax year of whether you will be in or whether you will be out will be the 2024 to 2025 tax year. So as you complete your 24-25 tax return, you'll be able to see whether you are over these thresholds and whether you will need to be registering for Makingtaxdigital. The later you leave it, the later you will find out whether or not your property income is hitting that level. So it will just give you less time for planning. If you already know you're over, I would say make sure you are doing your planning and getting things set up so that you are making sure that you are going to be compliant with the new requirements as of 2026. And if you're not implementing till 2027, it doesn't mean you cannot get set up early to make sure you are happy and confident with what you need to be doing as you do fall into the regime, as well as those that may have income over 20,000, so that you can be on the ball with this and staying ahead of the game and keeping up with what needs to be done. Check out other videos on Makingtaxdigital, and as we get more information about registration, about what the needs are, what you can do and what software to be using, then please check out the future videos on the channel to help make sure that you are getting ready for Makingtaxdigital. This just gives you a taster of a few examples, and if you have found this video useful, please do leave a comment and let me know what other situations or circumstances or scenarios you would find useful, so we can put them out there to make it a little bit easier for you to start to figure out, are you going to be in or are you going to be out? As we've got 3 years coming up where you could be in or you could be out, and it may be a difference between 12 months or doing it now, which time frame you are working to, depending on what your rental income is that you've got at present or at specific dates. Good luck with your calculations. Hopefully today you've discovered exactly where Makingtaxdigital kicks in for you, or at least got an idea of some of the examples so you can have a look at how you're going to be impacted. If you have any questions, then please do leave a question in the comments. Please like the video and do subscribe to the channel, and let's make tax less taxing.